All right, team, it's that time of the week. It's a fun Friday. It's time for the bottom line. Your buddy Derrick Evans here, VA Home Loan Specialist, NMLS 155010. And with me today, she still seems to be sporting a last name that isn't really hers. Monica, can we say Monica B?
Monica B.
Monica
Yes,
B?
that's fine. I'll
At
take
some
it.
point,
Thank you.
you won't be embarrassed of me or what we're doing here, and you'll put your real name on it so that your friends can see it. Right now, she's still not sure. She's not sure if she wants to share it yet with her.
We'll see. I don't know if I can put my real name on. I reveal my real identity with Derrick
So
Evans.
the show, the bottom line, this is what we're doing every Friday at 3 p.m. We're still introducing it, so we're letting you know. Monica's going to hit me with a bunch of questions, stuff that's trending, what's going on. We're going to talk about the things that I know about, which is mostly finance and real estate. Know a little bit about crypto. We'll talk about that too because it's a huge, huge player in the asset game right now. Inflation is a big topic. So Monica's going to ask me questions. I'll tell her whether they are boring and we should move on, or I'll give her an answer if I think that you need to know what's going on. So Monica, let's get to the bottom line.
Let's do it. All right. So, Wall Street's biggest fear isn't COVID, it's inflation. If you haven't heard, stimmies began to hit bank accounts a couple of days ago. Yes, I'm abbreviating stimulus checks as stimmies.
They come so
Also,
often now. We have a nickname for them. That's great.
and I'm referring also to these as 1,400 Biden bucks.
Okay, Biden
Uh,
bucks. All right.
Potentially $400 billion that could be pumped back into the economy.
Yep.
I mean, I know people on a personal level are really struggling and they may really need it, but like as a whole, does the general economy need it? I mean, stock market's doing great still.
Do we need it? Bottom line, the stimulus is coming. It is what it is. Unfortunately, like 90% of the money, that was earmarked for this stimulus is not actually going to the people. So that's where people, get a little wishy-washy with it and they kind of don't like it. And I understand that. But the reality is it's going to help some people a little bit. But even if you were completely destitute, $1,400 would be great. I mean, if you walked up to someone who's homeless on the street, hand them $1,400, that would last them a week or two, maybe, staying in a hotel. But so like even in the worst case scenario, it's not really a long-term solution. It's a big time band-aid. So I don't really, bottom line, no, it's not getting us anywhere. What we're seeing though is we're seeing a lot of that money is going to flow into stocks, is going to flow into cryptocurrencies. We have basically all-time highs in everything, right, Monica? We have all-time highs in Ethereum, all-time highs in Bitcoin, all-time highs in the Dow, all-time highs in the S&P. The Nasdaq has pulled back a little bit, but near an all-time high on the Nasdaq as well. All-time highs for real estate median prices across the entire country, not just in
Which
San
is
Diego.
so, I mean, are we in a bubble? Is that going to collapse at some point? Is
So
it all real?
it's not a bubble. It's not a bubble. What it
Okay.
is it's inflation. So a bubble, would be that hey, there's certain things that are exacerbating the circumstance to the extent that those things could change, and then it would essentially course correct. What we have right now is we have just a lot of money out there. And this has been reported for the last few years. A lot of people who are big time bulls on Wall Street and big time stock bulls have been talking about the cash in the sidelines, the cash in the sidelines. There's $1 trillion of cash in the sidelines. There's $1.1 trillion of cash on the sidelines, meaning people just holding on to cash that haven't invested it or bought anything with it. And so we're seeing that, getting deployed as people had more time on their hands during COVID, and it hasn't stopped. And so inflation is not something that's forced on an economy. It's something that happens based on supply and demand. And right now there's so much demand for all these things. It's really, really crazy. Even, cars, brand new car sales are insane. RVs, I mean, you name it, almost every big ticket item, there's lines to get into it. So that's what inflation really, really looks like. So the big question is for people who are risk averse or who do sit on piles of cash, what do you do with that? And that's where a lot of people believe that Bitcoin is the answer. And you can see if you look at, Bitcoin and gold, and maybe I should pull this up because, typically people would say, hey, listen, if we're going to inflation, like if we're going to experience inflation, then absolutely for sure the 100% best bet is going to be on gold. That's absolutely where everyone would be flocking to, and people are still going there. We're still buying, we're still seeing people buy gold. In fact, gold is up today decently. I'm going to show you the chart here in just a second. So here's gold. So let me get this So you can kind of see it, 1743. But you can see the chart there. I mean, going back to August when we were at the highs, and it's down significantly from there. It hit almost $2,000 an ounce, and now we're at 1750. Now, if we know that inflation has been taking place for sure during that period of time, we should have seen gold go much, much higher. But what are we seeing instead? You just saw that one there. So take a mental picture of what that one looks like. And now let's look at Bitcoin. And what we'll do is we'll just look at that same sort of time frame. Let's call it September, or so till now. Notice the difference? Monica, I know you read charts.
Okay. So what is this telling us exactly?
What it's telling us is that gold is no longer being revered as the protection against inflation. And so, so what is then? Well, one thing that has always worked well with inflationary cycles, hard assets. And gold was always considered to be a hard asset. So real estate has done extremely well. And in my video earlier this week, I actually showed a graph of, the cost, the price per square foot in San Diego and in Temecula. And you could, it's not quite as parabolic as this move is here in Bitcoin. But look, this is where we're talking when gold hit its peak was right around here. Okay. Just right before September. It was in August of last year. After that, though, gold has declined pretty significantly, 13, 14%, something like that. In that same time frame, Bitcoin has gone from 11,000 to 58,000. So Bitcoin is up 500% in 6 months, and gold is down 14%. So, that is a massive shift in, just what's happening with people and the money, where the money is flowing. And why are people so into the crypto? Well, it's particularly Bitcoin, because there's only so many of them. Remember, there's only 21 million possible Bitcoin. About 18.5 million are out right now. The other 2.5 million, it's going to take 100 years for the miners to get the last 2.5 million, because it is an exponentially decreasing scenario. Yeah. Basically, everything with Bitcoin is designed for deflation, or the increase in the value of your investment, including the cap on the inventory and the entire structure and model of it. So if you have an asset that's designed specifically for deflation, and you have an inflationary world economy, this is the reason why you're going to see Bitcoin go crazy. And there's a couple stories this week that were big on that. The Morgan Stanley story.
That they are accepting Bitcoin as an asset class.
Well, that was actually, it was Goldman Sachs who said that, who said, they basically do a weekly report, and they had listed Bitcoin on it before, but they hadn't, actually listed it as an asset class. They changed it, started making it an asset class, which is pretty amazing. But with respect to Morgan Stanley, this week, Morgan Stanley became the first major U.S. bank to essentially offer its clients Bitcoin exposure. And you can find this everywhere. This is reported all over the place. This is what I was telling you about. Remember when I said, hey, the reason I'm getting into Bitcoin finally is not because I necessarily understand it better. I do understand it better. I feel like I've always understood the reason why people would want to invest in it. The catalyst for me, though, is that Wall Street is about to get on board. Wall Street is getting into the game. The writing's on the wall. It's happening. Elon Musk has invested billions of dollars. Michael Saylor has invested billions of dollars. There's a website, in fact, that you can go to. It's called, I can't remember. What is it? Oh, man, I'll have to go back and put this one in there. I can't remember what it is. Dan Held told me about it. But it basically lists out all of the private and public companies that have invested in Bitcoin. And you can see how much they own and when they bought it and all this stuff. And it's just starting to happen. So then this week, we see Morgan Stanley come out and say, we are going to get ahead of this thing. We are going to try to be first. They're creating offerings here, but they're only giving it to their rich clients. Monica, do you know how this works? Do you know how Wall Street works?
Yeah, I had an economy teacher in college say the answer to, if you wrote money as an answer to any question, he was going to give you credit because it had to do with the answer in some way.
Okay. Well, let me explain something to you real quick. So the way that it works is the wealthy get access first. This is part of the reason why Wall Street and the government and the elites don't like Bitcoin, because it was all the small guys who got in there first. They hate that. The way they like to run things is, hey, we're going to run this thing up. Let's call in all the rich people. Okay. We're going to tell them we're going to run it up. We're going to get them in first, and then we're going to release it to the masses and use our sales organ to essentially get this thing out there. And so this has happened in a way that they didn't know what to do about. So they tried to ignore it. They tried to downplay it. They tried to shit talk it. They tried to do everything they could to knock it down. It couldn't be knocked down. As of right now, over the last 10 years, Bitcoin is the best performing investment of all. It has averaged annualized growth of 200% per year. That means it doubles every 6 months. There's nothing that's even remotely close to that. So they can't stay away, Monica. They are too
so tempted.
FOMO is just insane. Okay. And like during that same 10-year period, the S&P has returned like 11 or 12%, which is really good, but it's not 200. So what's happened is these guys, and they're so antiquated. They're so in the old days, they're still doing the old function. So if you read these articles about this Morgan Stanley offering, they're only making it available to wealthy clients who have over $2 million in their portfolios, because in their heads, that's the way it works. We roll it out to these people first, we let them get in, then we push it to the masses.
And
so
that sounds illegal, right? No?
Nope. They can do whatever they want. Now, you have to be a total bozo to allow Morgan Stanley to tell you what you can and can't invest in. You have to be a complete total sheep dingbat to be involved in that situation. But a lot of people are. And so because they're used to the old way, and maybe they've done well, maybe their advisor's done well for them. And so they just listen, and that's what they expect. They expect you to listen. It's absolutely insane. Now imagine this. A wealthy client at Morgan Stanley has just been told they're going to soon, it hasn't even happened yet, get access to Bitcoin. Guess what? You can go buy it right now. So talk about an opportunity where we have a chance, Main Street, us, the little guys, the hoodie guys against the suits, we have the chance to be into something before they get in. That never happens. So even though Bitcoin is at this high, we're at 500% in the last 6 months, we still are able to beat those wealthy individuals and those big brokerages from getting here. Because remember, this is just the first one. This is going to happen categorically across the board. I guarantee you that. So yes, Bitcoin is the new hedge against inflation. The market has told us that loud and clear. And it also has other mechanisms. So bottom line, Monica, Bitcoin is the new hedge against inflation.
You sell me on Bitcoin every week.
It's the best investment in the last decade. I mean, it's not me. It's just simple facts. You know what I mean?
Yeah. But this institutional money guys, the big boys, I'm sure they're still mad about this ongoing Reddit rebellion. And are they going to try to short something? I'm sure they can get crazy. I'm sure they have some insiders. I mean, do we all forget about Robinhood? Aren't we all supposed to be mad at Robinhood, or that just kind of got swept under the rug?
Robinhood is a brokerage just like the rest of them. Don't kid yourself. So bottom line, if you're going to pick a brokerage, just know they're all the same. There's no one out there who gives a damn about you. Sorry. And just know that the brokerage is taking the other side of your trade. They're expecting you to lose money. That's how they make money. FYI.
The house always wins.
Yeah. Well, they're taking the other side of your trade. It's like if I'm dealing you blackjack, right?
Mm-hmm.
I want you to come to my blackjack table. But the reason I want you to come to my blackjack table is because there's going to be a few people who win here and there and walk off with some money and high five and go buy drinks for everybody. But the majority of people are going to hand me money all night long. So, and by the way, I'll run a blackjack table at any party if anybody wants anytime. I used to do that back in the college days, and I crushed. So it's great. So the same thing is true for a brokerage. Brokerage is just a blackjack table. And so they're expecting you to lose money so they can make money. They're on the other side of all of your trades. That's how it works. So
I've never thought of it like that.
100%.
I thought
I
they
mean,
were
yeah,
with me.
no, they're taking the other side. You're buying a stock from them.
Yeah.
You're selling a stock to them. They're literally on the other side of everything you do. So,
Oh man.
if you make a ton of money as a trader, sometimes it can be hard to find a platform. If you're a really good trader, there platforms will look for ways to get rid of you because they don't want to lose all that money. But the reality is, Robinhood, Schmobinhood doesn't matter. Morgan Stanley, Fidelity, pick one and just know that they're all the same, and they're all hoping that you lose money so they can make it. Now, the 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 real thing with the Wall Street bets and the GameStop and all that stuff that's interesting is that there's a community behind it. And that's where the real value is. If a community can decide, hey, we're going to play the other side of this game so that Wall Street doesn't just have a completely downhill path to do whatever they want, that does make the market more free again, because it'll keep some of those hedge funds who would just normally go and just pile in and short a stock like GameStop. It'll make them think twice and go, you know what, are we on these guys' radar? Like, maybe we shouldn't do this. Maybe there's an additional layer of risk. Maybe we shouldn't short this stock. And that, I think, is good, because that's a little bit of police check work that needs to be done in the marketplace. So as far as Wall Street bets is concerned, I say, get at them, boys. Keep them in check. Hold them accountable. Somebody's got to do it.
I would have to agree. Planned ETF would invest in Grayscale's GBTC to sidestep SEC's crypto.
Is this one of those moments where you're freaking out and so you're just reading the notes because you're not sure what to say, or?
Hey.
Is that what's happening right now?
No, I'm just really poor at segueing.
Transitioning.
It wasn't
we'll work
like
on that.
a switching gears moment because it's kind of the same topic. But I was going to say, is Canada going to approve Bitcoin as an ETF before the US? What's up with that, eh?
They already have, by the way, BTCC.
Oh, wow. Okay.
And they got, in the first 2 weeks, hundreds of millions of dollars poured into that ETF. It's a huge example of a massive demand for exposure to Bitcoin. That's just on a small exchange in Canada. It's coming. Grayscale will probably be the one. They'll probably convert GBTC into an ETF so you can get exposure there. I own GBTC in my retirement accounts and other accounts for my kids' college funds and stuff like that, which is basically just a fund that owns a bunch of Bitcoin. It's kind of the only exposure. There's people who believe that it's limited, and the big brokerage houses, they deter people from going towards it because they don't have the extra money that can be made on the back end of that deal. So that's why you're not seeing that should go crazy, but sometimes it's trading under its value of the coins that it owns. So there's a ton of negative sentiment with GBTC, which makes absolutely no sense. But let's see. As far as Canada got it first. Yep. The chances of us getting one in the U.S. is going to happen this year. Oh, the stock market. So you said on here there was numbers from this article. 15% professional investors think U.S. stock market is in a bubble. 25% say stock market is early stage bull market. 55% say it's late stage bull market. The bottom line with the stock market right now is that you just have a situation where there's very few places to invest your money that are safe. And so all of a sudden the S&P 500 seems safe. Have you ever been in like a really, really bad neighborhood and then you went into an intermediate neighborhood and you're like, whoa, this is so much nicer? That is what's happening with stocks. People are going there because the bond trade doesn't make any sense, even though bond rates are up, mortgage rates are up, rates are just up across the board, which is signaling inflation to us. That's the lie detector test on the Fed notes from this week is just look at rates. Rates going up in the free market is proof, that there's inflation taking place. But anyway, the bottom line is with stocks, there's a lot of reason to go there. If rates continue to go up, there will be less reason to go there. So the bond market and the stock market will help equalize each other regardless in the long run. And the Fed can only do so much with the bond market. The bond market is absolutely enormous, and they can't control the whole thing. They're trying to control mortgage rates. They will do some things with 10-year and 20-year treasuries, but they can't control the whole thing. That's really just not possible. It would take enormous amounts of money to manipulate the entire thing. So they're usually just putting a nudge here and there. And as of right now, they can't control the fact that rates are going higher. So That could cause some money to come out of stocks like we saw today a little bit. As the 10-year is getting up close to 2%, it very well may get there. It's hard to say, but it very well may get there. Gets to 2, things will change a little bit. But remember, the rate of inflation much higher than that, so it doesn't actually make sense to invest there, which is why most investors, particularly big investors in investment firms, are sticking with the stock market because it has been working nonstop for over a decade. And
Absolutely. Everything's, I mean, I think generally everything's gone up from 5 years ago, 10 years ago, 20 years ago. If you had just bought and hold and not gotten shaken out of your position and not been scared when it did go down
yep,
temporarily, and that's what scares everybody and say, oh crap, I got to sell this before it just drops.
yes,
For the unexperienced traders. It's a real psychological game.
it is. If you can learn to fade yourself, that would be the best thing you could do. And what I mean by that is do the opposite of what you think you should do. If you have that kind of control, you can literally trade and do really well. Like you're like, oh man, I should buy right here. Don't sell.
Wow.
If you can actually do that, you'll make money still. See it, but
Oh my gosh.
it's very difficult to do. And you're right, and they play on the emotions, and that's one of the things that makes Bitcoin so sexy as well. While you can short Bitcoin, can be shorted, you have to have some major stones to short that thing, especially considering it's the best performing asset in the last decade. I mean, I don't know who would have, the cojones to go in and actually short a Bitcoin based on its performance and how violently it can go higher. Ugh, boy, I wouldn't want to be sitting in that seat, and I don't know whose money that person is shorting it with, but they're going to be pissed when they find out probably. So that's one of the things that's nice protection about Bitcoin, although you do see it, it's volatile. It's all about the expectation, the confidence that you have in your investment. That's why you should never invest in something that you would get scared out of if the price went down. You should have enough conviction in it that if you see it go down, you get excited because the market is mismanaging the value of it. And you've done your research and you feel good about it. It's like if Bitcoin went down from 60,000 to 10,000, I'd be stoked. I would get so many more coins that way because I know what the long-term prognosis is for this thing in the next 10 to 20 years. I know where this is headed. Now it can't be stopped. It is now a foregone conclusion. It's not a matter of if. It's simply a matter of when. And the when is getting accelerated up the timeline to the left because of Wall Street's involvement. And if it wasn't for that, if it was going to take just the retail guys, it would have taken a lot longer. It could have taken 20 years to get to $1 million of Bitcoin. Now it could get there in 2 to 3 years with Wall Street. So it's one of those things where the catalyst is coming in. It's accelerated. It's made it a very exciting trade opportunity for people. And, I could go on and on about Bitcoin. I know we have other things we want to talk about here. The real estate market is definitely one of them. We've seen rates.
Absolutely. I wanted to backtrack just a moment, and maybe this will put us into the right gear we want to be in. Janet Yellen came out saying that inflation rates, just rates were going to be up, but that she didn't expect them to be sustained.
Mm-hmm. Okay.
Do you believe that?
Yeah, she's right.
Okay.
She's right.
But I don't want to say this, but I'm going to say it.
Do it.
We were also told that, we were just had to stay at home for 30, was it 2 weeks or a month?
I don't remember.
Yeah, right.
I don't remember.
Either way,
it's been a year.
What? Yeah, at least, very strong 6 months. Still people wanting to stay at home a year later. Yeah. So I don't know if I believe that anything that's coming from that higher up.
Well, it's tough to trust the government, right? Because you know that they have there's always some sort of politics or ulterior motive going on with every single thing. It's so annoying and frustrating and just exhausting. But she's right. So let's take a look here. We'll look at, this is mortgage rates again. We're fighting off this accelerated downtrend, which has taken place right here. And as you can see, it's holding pretty well. Another bad day. So two really bad days in a row.
Where's its last support?
Support is way down here. We touched it today and we closed just below it. So it doesn't look good.
Oh, okay. We passed.
Yeah. Bottom line is, this is, it's bad. It's a bear flag. It's a huge bear flag. And the chart looks terrible. and we don't have a catalyst right now for bonds to go up. Remember, we want bonds to go up, okay, because that is how mortgage rates go down. If bonds are going down like this, that means mortgage rates are going up. And we actually switched coupons. This is the 2.5% coupon, not the 2% coupon anymore, because we're getting close to the 2% is already under 100, meaning that it's selling for less than face value. And this 2.5% is still, selling at 102 and change right now, 102.27. So it's still above that, which, and by the way, important note, rates are still really good. So although rates have gone up and gone up and gone up, they've gone from low twos to high twos to low threes, and so a lot more people are getting threes now, or three, or right around there. That's still really, really good. So we got to keep that in mind. I'm doing a refinance for someone who has 4.5% right now. A lot of people are paying too much still for their home loans. But bottom line is, Yellen is right in this case. Rates are going to get worse before they get better. And I'm just going to give you the bottom line on it, Monica, because it gets really boring. Bottom line, rates are going to go higher in the short term.
Okay.
And then there will be some relief when the year-over-year numbers get extended out past the first couple months of COVID from last year. And that will change the inflation indexes and some of the things that are triggering some of the selling of these bonds. So give it just a little bit of time on this, and rates will improve. So if you're refinancing and you have some time, it might be a month or 6 weeks before you see things turn around. We locked a lot of people in earlier this week and late last week ahead of that, because we just didn't have that kind of time. So expect mortgage rates to go higher here in the short run. I'm going to call it the next 4 to 6 weeks. And then we should get some reprieve as the year-over-year numbers start to turn around and show us better inflation stats. They should bring some investors back. Also, if the stock market does have some sustained red days, that will help too, because then, as an investor, you look at it and you go, oh, well, we lost 0.5% in the Dow today. That 2% bond sounds good here. People don't like being in the red, so it could help. But like I said, we've seen a relentless stock market, so I don't see that being the case.
So going into real estate, home buyers canceling contracts, costs soar. Did you hear?
We do have to work on your transitions. So
building materials are going up.
Well,
and that
costs for buildings going up, but here's the thing, and that's a more of a national thing, no question about that. And we saw the tax credit, and that was a big thing this past
how
week.
is that working? Do you just get $15,000 off your taxes for the next amount as like a gift card? How do you get that money back?
The government gives you a gift card for $15,000.
If you buy a house.
It's a Lowe's gift card. So that would actually be great. What they actually do, though, is they give you a tax credit, which means you don't see any of the money until you file your next year's taxes. So if you were buying a house today and you were getting this tax credit, which we don't know if this is actually going to pass yet or not, what would happen is when you did your taxes at the end of 2021, you would have a $15,000 write-off, expense write-off. Essentially, that's how it works. So it's a tax credit, it works in that fashion. And
so would there be remainder usually, or we don't, just depending on the person?
Yeah, well, you would, first of all, you would need to itemize. If you don't itemize, then it wouldn't help you. But 15,000, most people are going to be able to use that if you're not itemizing before. So I'm not a CPA. Consult your CPA about this. But
I need a tax guy. Anyone got any recommendations? Please put them in the comments.
Yes, Steve the CPA for sure. mysdcpa.com. So with something like this, though, the big controversy was, hey, we already have a really hot real estate market. Why do we need to do more buyer incentives? Right now, we already have way more buyers than sellers anyway. Why would you want to make this even crazier than it is? And I understand that. That's kind of where I feel about it. I also understand people are saying, hey, there's a lot of people who are just sort of locked out of this market and they could use that. Well, if you're in a, let's say, 33% tax bracket, which would be pretty high probably for most first-time buyers, but let's just do that for easy math. This is essentially a $10,000 gift. That's what it's going to pencil out to. And so if that's the case, that is a big deal for a lot of first time buyers. But a lot of first time buyers who could really use that 10 grand are just simply not able to win in this market because it takes so many things like waiving appraisal and, being able to come up with extra money if needed. And proof of funds is something that agents are asking for before you even look at a home. So it's changed a lot. So I think this is poorly timed. Ideally, Monica, and I don't know if you were, how old you were you maybe in first grade when the market crashed? I don't know. You
In
definitely haven't seen
2008,
it. It's been 2008.
I was a junior in high school.
Junior high school. Okay. So so when the
I
market
was fine. What do you
so,
mean the market crash?
so when the market crashes, that's when you want a first time home buyer program. When buyers scatter like roaches, that's when you want to say, hey, let's do something to get buyers to the table so that we don't have a crashing real estate market. You don't want to put incentives to bring buyers in to help build the market up, to help build a bubble in the market up. So that is typically, so bottom line, this is not a good idea. It's not necessary. It actually could add fuel to a fire that may have already been burning too big for too long. And that's the one thing we do not need. We do not need any acceleration in the craziness that's going on in the real estate market. In fact, we need some deceleration, if anything.
Absolutely. How many loans did you close this week? I mean, there's just, it's not slowing down, right?
Yeah. I mean, well, it's not that the market is definitely hot. What's difficult is the winning percentage. The number of buyers who are able to actually win is decreasing because there's less homes for sale. So there's a lot more people who want to buy, but there's less people who are actually winning, less total transactions, which is straining the market in a different way. So we definitely don't need that at the moment. There's some other things too. Let me see here. There was there's some tax stuff too. We're not going to talk about that. Taxes kind of sound boring right now.
Hikes, man. These taxes are getting me.
Yeah, the tax hikes. We'll talk about that another time. I don't know. It just seems boring right now. It's like March Madness, and I know that's not our shtick, but it's Friday. We're supposed to be having a good time. I don't want to talk about taxes right now.
What are you doing this weekend?
I'm just gonna hang out with my family.
Do we care or we don't
care? We just play. We don't care. No one cares. No one cares. Let's see. Was there something else in here I wanted to get to? I just want to double check this. I think we did a good job.
Oh boy,
I think we did. I think we can.
We're getting better. I'm getting better and better. You're a professional. Thank you so much for hosting me on your channel. You're not embarrassed of me for whatever reason.
No, I'm not. Well, I know the talent that you have, and I know that once you feel 100% comfortable in this format, you are going to be amazing, and everyone else does too. A lot of people are already reaching out to me going, "I love Monica," so just know.
Oh my gosh!
That is. Oh yeah, that's gonna happen big time. So here's what we're going to do. We're going to continue to improve our flow. Obviously we're, just getting started with this. This is episode 2. I want to give you the bottom line on some of the things that are the hottest topics out there. And just put some things out for discussion. So feel free to comment, share this with your friends, share the link, share it to your social media, give us a shout out, say what's up. We'd love to hear from you. And we'll be back again next week for the bottom line, episode 3.
Absolutely.
Everybody go out there, have a great weekend, watch some basketball, and have a great time. We'll see you soon.